Hi, Paul Gerard from Price Accounting Services, back with another video in our Business and Entity Matters channel. This video is going to cover Personal Services Income, or PSI, and we're not talking the pressure in your tyres. Okay, PSI is a somewhat simple but complex matter, and it's a tax issue which has been a feature of tax law for well over 20 years. Sometimes I have people tell me, oh, is that new? It's not new. I'm not new and it's not new. Yet it's an astounding how often it's ignored, including times when we accept new clients. We find that there's been complete and total dereliction of the correct basis of taxation. It has potential for very significant penalties and outcomes if it's not complied with. In a nutshell, PSI is what arises when personal efforts and exertions of an individual are earned by an entity. Pretty straightforward definition. The income is basically alienated. So in other words, instead of it being earned and produced by the individual and put in their tax returns, it's been alienated so that the alien aspect is the company. So that it is produced in a company for a lower tax rate. That's the offending bit, okay? PSI rules seek to recognise this and unwind the mischief rather than eliminate the mischief, because it's more practical to fix the problem than it is to go through complete surgery to unwind and completely change. It's a bit like a prosthetic limb is to removal of a leg. It's much easier perhaps to learn to use a very finely developed and crafted prosthetic versus not having a leg. So the penalties and the mischief can be fixed is the message. The common issue with PSI that creates offence is often in small business, but it can be in others. It includes the example of a contractor who might perform services to a single client, often also in breach of the Fair Work Act. Okay, but let's leave that aside for now as a legal aspect. In some cases, we do get approached by clients who say, my employer has approached me and said that they'll allow me to work for them as a contractor. And can you explain to me how I set up the company, etc.? A word of warning, that is actually prohibited by law, and I seek not to be involved in breaches of the Fair Work Act. That is very different to the case of a person who might, for example, through a recruitment agency who specialises in contracting services, seek to engage someone as a contractor, and they ask about how to establish that entity. So bear that in mind. The entity shouldn't and can't retain profit when PSI is involved. All profit should be attributed to the individual's salary and wages, which automatically means the entity must also be using single touch payroll and be registered for PAYG withholding. So I'm sometimes asked by people, well, but I don't really want to withhold, I can better use the money in my offset, etc. No, doesn't work, fails. Must be withheld. PAYG withholding is an obligation. Certain costs can also be denied with PSI, such as paying a spouse, 2 cars and things like that. It's something we advise on a case-by-case basis. PSI entities must still comply with STP and superannuation guarantee, so can't opt out of super either. Okay, if they do, the PSI attribution rules can remove mischief, but can't remove the SGC non-payment. Okay, careful and diligent tax support is generally recommended for PSI entities, including assessing whether the PSI rules specifically apply. We have seen cases where people have assumed, and I've even assumed, that PSI rules will apply. We've sought ruling from the ATO, and the Commissioner has favourably considered that the PSI rules do not apply. So that can produce some other benefits, such as you might then be able to pay a spouse to perform ancillary service that assist and support the production of income without actually producing the income itself. So, for example, writing up professional reports and assisting in getting work out and things like that. Some cases also assist to regularly revisit the PSI decision flow chart. This could occur on an annual basis or as matters change. One common issue I see is a misunderstanding or a negligent understanding of the rules and the rulings in relation to PSI, where somebody might work as a contractor for a block of time. They then seek to change contracts and they say, no, I meet the 80-20 rule because I earned 50% of my income for one contract, 50% for another contract. However, on reading the simple rulings in that respect, we show them that the rule contains a limit that looks at how you accepted that engagement. So, for example, if you've been using a contracting labour hire firm or a recruitment consultant, then the facilitation of that fails, and that is considered to be one period of PSI. It would be different, for example, if a contractor is advertising their services to the public at large, and the public at large take on, for example, say a quantity surveyor, operates a quantity surveyor consulting business, and they advertise and receive numerous engagements throughout the year, and then are also engaged by a large quantity surveyor firm to produce tax reports for them. That might escape the PSI rules based on certain issues, and we would be happy to advise and guide such a situation. So I hope that's assisted your knowledge on the basics of PSI and personal services income, and if you have any questions in that regard, we always welcome them, and otherwise we hope you enjoy further videos in this channel or those of our other channels. So till then, bye.